Alright, you have noticed the change in cryptocurrency market recently, yeah? So the bullish momentum has faded, critical support levels are being tested, and there is growing uncertainty across both Bitcoin and Ethereum. This shift isn't happening in isolation. Behind the scene, a significant development occurred that most investors are misinterpreting. The Federal Reserve just initiated a substantial short-term liquidity operation. And while many are celebrating this as a stimulus, they are missing the crucial context. So today I'm going to explain what this emergency banking operation really means for crypto, the key technical levels that matters right now, and why we might be facing final volatility before the next major trend emerges. So here is understanding the Fed's emergency move. Okay, let's clarify what actually happened. The Federal Reserve didn't launch quantitative easing. Instead, they activated what's known as a repurchase agreement facility, essentially an emergency lending program for bank-facing short-term cash shortages. So here is how it works. When financial institutions experience liquidity crunches, rather than forcing them to dump assets like treasury bond into a weak market, the Feds provide overnight loans using those bonds as collateral. The banks repay the loan the next day with minimal interest. This isn't new money entering the economy, it's temporary bridge loan designed to prevent financial system seizures. The critical takeaway here is this indicates underlying stress in the banking system. The Fed's prolonged policy tightening is finally creating liquidity strain. When these emergency facilities become necessary, it signals that financial conditions have become too restrictive. Historically, we have seen this pattern before major policy shifts. Similar banking stress in late 2019 preceded the Fed's eventual pivot to easing. However, there is an important sequence, market rates typically appears before the actual policy change. So what this means for crypto markets? This creates a complex short-term environment for cryptocurrencies and other risk assets. When financial liquidity contracts, speculative assets often face selling pressure and increased volatility. So examining the chart reveals we are at a decisive moment. Bitcoin is approaching the crucial 100,000 to 106,000 support zone and an area that must hold to preserve the long-term bullish structure. A breakdown here could open the path toward $88,000 to $90,000. So what about Ethereum? Ethereum shows similar vulnerability, having broken below immediate support with potential to test the 3,300 to 3,600 range in the near term. This isn't the reason for alarm, but rather a call for strategic patience. So the conditions that typically force Fed policy changes and market stress and system-wide liquidity issues often include final market checkout before sustained recoveries begin. So what's the strategic perspective could be here? Here is the essential context. While near-term conditions appear challenging, the medium to long-term setup remain constructive for cryptocurrencies. When the Federal Reserve eventually shifts from policy tightening to actual stimulus, when they generally begin expanding their balance sheet again, and it creates ideal conditions for hard assets like Bitcoin to perform well. So we have witnessed this pattern repeatedly, right? So market stress leads to central bank intervention, and which floods to system with liquidity, which then seeks the highest growth assets. Cryptocurrencies have consistently ranked among the primary beneficiaries. My current approach balances short-term caution with long-term optimism. And I'm preserving my capital for potential buying opportunities if we're gonna experience a final market washout, rather than aggressively chasing position during this uncertain period. And what about the critical levels and strategy? These are the specific technical levels I'm gonna be monitoring. For Bitcoin, the $100,000 to $106,000 range represent major support. And a strong reversal here could indicate the correction has concluded. A decisive break lower likely target to $88,000 to $90,000 zone, which could present attractive entry points. For Ethereum, the 3,300 to 3,600 area constitutes significant support. And continued weakness suggests a test of this range is probable. My strategy involves waiting for confirmation at these technical levels rather than attempting to predict exact turning points. The objective isn't perfect timing, but establishing position with favorable risk-reward ratio as market structure clarify. Remember here, the optimal time for aggressive positioning comes when the Fed clearly pivot policy and liquidity begin expanding system-wide. So what's going to be my conclusion from all of this? What we are observing represents the typical transition phase from policy tightening to what will eventually become renewed stimulus. This process is really smooth. It's criticized by volatility, emotional swing, and investor uncertainty. For those who understand this cycle, however, it represents strategic opportunity. The Fed's emergency banking operation isn't the policy pivot itself, but it may signal we are approaching that turning point. Maintain discipline, manage position size carefully, and keep capital available. When monetary conditions truly shift toward accommodation, you will want to position appropriately. And if you found this analysis valuable, consider subscribing for ongoing market insight. Thank you for watching, and I'll look forward to our next discussion.